Hi friends, today we are going to discuss about balance sheet in accounting, which is very important for any company because balance sheet shows where we are standing with respect to assets and equity and liabilities. So let us look at what is this balance sheet. So if you look at the formula, always assets on the left side and equity plus liabilities on the right side. So let us look at what is this assets and equity and liabilities. So always the value of assets equals to value of equity plus value of liabilities. So what is assets? So assets are generally controlled by an individual or a firm, and that helps generating future cash flows, right? That is called asset. We will look into an example as well. And what is equity? Equity is generally the ownership either by self or through investor, so who invests money into the firm, right? And then what is liabilities? Liabilities, let's say you have taken some loan from either by bank or from your friends or from investors, where you need to pay the money back to them, which is called liability. Right. So let us take an example. For example, if you want to start a restaurant, right, and then you need an investment of let's say 1 crore rupees, but you have only 20 lakhs with you, and then you have taken remaining 80 lakhs through bank loan, right? So now if you look at assets, what is the asset here? Asset is this 1 crore, you have the asset, and then equity is you have invested self, this is self investment, that is self equity, which is 20 lakhs, and then you have taken bank loan of 80 lakhs and you need to pay this amount back to bank, so it is called liability. So how you will show this? 100 lakhs equals to 20 lakhs plus 80 lakhs. So this is how you will show balance sheet for this particular transaction, right? So now if you want to know what is the equity, so what is the formula for equity now? You bring this asset to the right side. So asset minus liabilities, right? So now you have equity of 20 lakhs, which we have discussed, and you have asset of 100 lakhs, and you have taken a loan of 80 lakhs. So it is matching now. 100 minus 80 equal to 20. So let's say after 1 year you have got 10 lakhs profit. So what happens now? 10 lakhs will get, and you have, let's say you have paid this 10 lakhs to clear the loan. So now what happens? This becomes 70 lakhs. Asset is same 100 lakhs, and here since you have reduced the liability, your equity has increased to 30 lakhs. Let's say after second year, if you look at the balance sheet and from the income statement, if you have got a profit of 30 lakhs, for example. So now what happens? 100 lakhs is the asset minus you have, for example, paid the 30 lakh loan, then now you have balance of how much? 40 lakh, right? So now what happens here, you have equity of 30 plus 30, 60 lakh. So this is how we generate balance sheet every year. So now let us look into little deeper about this further into classification of assets, equity, liabilities. So if you look into this further, assets are now classified into two types: current assets, non-current assets. So what is current assets? Current assets is nothing but if you are able to generate cash in less than 1 year. That means, for example, you have a raw material or some kind of inventory, right? So this you can convert into products and then generate revenue less than 1 year. So we are calling it as current assets. Now what is non-current assets? If you are able to generate revenue after 1 year, greater than 1 year. Let's say you have land, or let's say you have some machinery. So where you can generate revenue after 1 year, then you can call this as non-current assets. So now let us look at what is equity. So equity you have again two types. One is equity share capital and reserves and surplus. This is one category, and second is preferred equity. So what is equity share capital? So these two generally called as common equity, and this is preferred equity. So what is equity share capital? So this is something which given by the self. So you have invested some money, and then that is equity share capital. And what is reserves and surplus? At the end of the year, through income statement, you are getting some profit after paying tax. That is comes under reserves and surplus. Sometimes this is also called retained earnings in US. And what is preferred equity? So let's say you have taken some equity funds from friends or family or some strategic partners. So why we are calling them preferred equity? Because once you get profits, first you are going to pay these people. So that is why you are calling preferred equity. And common equity, these are the people self you are going to get later, whatever the profits that you are earning. So this is about equity, right? So now let us look at what is non current liabilities and current liabilities. So what is current liabilities? Like assets, current liabilities also, if you are if you need to pay, if you need to pay within less than 1 year, right, then you can call it as current liability. If you can pay after 1 year, greater than 1 year, let's say you have time to pay more than 1 year time, so then you can call this as non-current liabilities, right? So friends, this is detailed formula for balance sheet, where you can see two type of assets, and then three type of equities, and then two type of liabilities. So this is in brief about balance sheet. Hope you understood. Thanks for watching. Like, share, comment, subscribe my channel, and thanks for watching. See you next time.